Moneyweb now. On the money.
Chatting now with Rob Timmis. He's a Fedgroup Chief Commercial Officer. Rob, appreciate the early morning time. Fedgroup just got a 500 million rand funding round from the IDC Industrial Development Corporation. This for your newly established Renewables Capital Fund. My sense, as a complete outsider, sounds like a big deal for both IDC and for Fedgroup, and I imagine for renewables in South Africa as well. It's a good chunk of cash for the space.
Yes, thanks, Simon. Good morning. I think you're spot on there. I think raising sort of institutional capital in this alternative asset space is tricky, and getting to these ticket sizes is a lot of hard work. Fedgroup's been doing this type of funding for around 10 years, specifically in the energy space. So it's not really news to us, but it's great to have a partner like the IDC along with us. And it really is our asset specialization and this experience that I speak to that sort of allows institutional funders to come in and co-fund with us in a public-private partnership.
Yeah, it's a great point. I mean, this is, as you said, it's not new for Fedgroup. You've been in this space for some time. Is it fair to say, I mean, you're essentially managing the fund. IDC really is around that long-term debt funding and their ability to help in that regard.
Exactly. So as a catalyst funder, they can come in and allow us to actually grow our funds, so to use our capital to go and find projects, develop them out, to bring them down the risk curve, pull them together into portfolios, create SPVs like we've done for this one specifically for the IDC, and actually accelerate deployment of capital into these specific areas. And I guess that's the IDC's mandate quite clearly. And as a co-funder, that's what they're looking for. I think they're looking for funders and people in the market that are able to do that for them, rather than trying to risk their capital. We use our experience and our specialists to make it easier for them to come into these types of projects, which are so desperately needed in this country for infrastructure investment.
And one of your key projects, Kloof Steel, just outside Gqeberha, your flagship asset. I mean, this really is providing solar for a steel billet manufacturer. Steel, hugely energy intensive, also fairly cyclical, but in a sense, taking it and saying it doesn't need to be the dirty energy. We can almost make, this becomes green steel in a sense because of the solar energy. Yeah,
correct, 100%. I mean, Kloof Steel is a steel recycler. I think there's a lot to be said about the recycling of scrap metal and steel in this country, and yes, very, very energy intensive. The project so far, which is in its second phase, has enough energy to put up power over 1,500 homes. It's sort of 11,000 odd solar panels. It's a substantial amount of energy. It's definitely a large project, but it is a relatively small amount of their overall energy requirement for now. And we hope to look to the second or the third phase to substantially increase that power plant and take them further to green steel effectively.
Are we seeing a funding gap from banks? And I'm thinking sort of we see a lot of these days around private credit, both locally and globally, sort of stepping into the picture as the more traditional banks, I suppose, step back in a sense. Are we seeing the same happening here locally?
Yes, for sure. We know globally private credit is one of the fastest growing asset classes. And locally, for sure, traditional lenders, they're retreating from sectors where there's a lot of specialized structuring required, and a lot of long-term capital is needed. So this gap's evident definitely in renewable energy, but related infrastructure, as well as other industrial applications and agriculture. And our approach is really to fund these real economy assets. It generates long-term cash flows, and they sort of fit our mandate. It's like I said, we've been doing it for a while, and we know it works, and we know that understanding the underlying real assets gives you that predictability. It offers inflation protection. It's much less exposed to short-term market volatility, and I think if you have the expertise and the experience to structure these deals correctly, why not? There's an opportunity for private capital providers.
Yeah, absolutely. And as you said, it's fairly predictable and long-term cash flows, and that is absolutely the attraction of it. Leave it there. Rob Timmis, he's a Fedgroup Chief Commercial Officer. Appreciate the early morning. That's it for the show today. This podcast is brought to you by Stanlib Asset Management. Invest in more certainty to navigate volatile market conditions. We're live every weekday morning, the Moneyweb website and the app, 6:30 a.m. podcast just after 7. Thanks to my team, Eddie Nobuklinako Sabusa, to you for listening, my guests for their time. My name is Simon Brown. This is Moneyweb Now. We'll chat again tomorrow. Evolution of modern retail.
You've been listening to another Moneyweb Now podcast, posted every weekday at 7 a.m. on moneyweb.co.za. Moneyweb Now, on the money.